analysis, we uncovered a shocking truth about a silent trap hiding inside your $100,000 balance. Based on our findings, freelancers reaching the six-figure milestone face an unexpected tax burden that drains their wealth rapidly. Our research shows that earning more money can trigger heavier tax losses than you ever expected from your hard labor. From what we found, the self-employment tax is the silent, dramatic conflict that targets every successful independent worker in America. According to our analysis, this specific tax rate of 15.3% applies directly to your entire net income. Our team observed that while traditional employees only pay half of this, freelancers are forced to pay the complete amount. Based on our careful review, this dual burden of being both employer and employee creates an immediate financial tax ceiling. When we look closely, earning $80,000 feels great, until you realize how much cash is vanishing into taxes. Our analysis shows crossing the $100,000 mark changes your financial landscape from profitable to highly dangerous. From our observations, many creative professionals work much harder, only to watch their bank accounts stagnate or shrink rapidly. Our investigation reveals that the IRS treats sole proprietors as simple pass-through entities with no tax protection benefits. Based on what we discovered, every single dollar you earn on Schedule C is subjected to this heavy federal tax. Our data confirms that your local state taxes and ordinary income taxes are added right on top of this high. From our analytical viewpoint, this cumulative effect can quickly push your total marginal tax rate past 40% very easily. Our team realized that many freelancers are working 3 months out of the year just to pay the federal government. Based on our findings, this hidden financial leak prevents you from reinvesting in your business or building real wealth. When we analyze numbers, a $100,000 earner easily pays $15,000 in self-employment tax alone. Our research indicates that this is where the traditional advice of just working harder completely breaks down for most people. From our expert perspective, you cannot simply hustle your way out of a fundamentally broken tax structure and system. Our team discovered that the solution lies not in working more hours, but in changing how your business is structured. Based on our deep dive, the limited liability company is the first critical step toward gaining control of your finances. Our analysis shows that a basic LLC does not change your federal income tax status in the eyes of the. From what we observed, the IRS still views you as a sole proprietor unless you make a specific corporate election. Based on our findings, this is where the magic of the S-Corporation tax election becomes an absolute game changer. Our team uncovered that an S-Corp is not a different business entity, but rather a special tax status you choose. From our systematic review, the single election allows you to split your business earnings into 2 entirely different categories. Our research indicates that the first category is your salary, which must be a reasonable compensation for your specific role. Based on our analysis, the second category consists of shareholder distributions, which are free from self-employment taxes. From our direct observations, this legal separation of income is the ultimate secret weapon used by wealthy business owners. Our team found that by paying yourself a reasonable salary, you only pay FICA taxes on that specific portion of. Based on our expert calculations, the remaining business profit can be taken as a tax-free distribution from the company. Our analysis shows that if you earn $100,000, you can split it into salary and distributions. From what we discovered, setting a reasonable salary of $50,000 leaves $50,000 as business distribution. Our team realized that you only pay 15.3% tax on the $50,000 salary portion of. Based on our findings, the other $50,000 escapes the self-employment tax entirely, saving you thousands of dollars. Our research reveals that this simple maneuver keeps over $7,500 in your own pocket every year. From our analytical perspective, this is not a tax loophole, but a fully legal structure designed by the government. Our team observed that the U.S. government created this system to encourage investment and reward entrepreneurial risk-taking. Based on our direct analysis, staying as a sole proprietor past this threshold is simply volunteering to pay extra taxes. Our research shows that the IRS requires your salary to be reasonable, matching industry standards for similar roles. From what we uncovered, you cannot simply pay yourself a tiny salary of $1 to avoid all taxes completely. Our team investigated how the IRS defines reasonable compensation, looking at average wages for similar professional roles nearby. Based on our findings, documenting your salary determination process is critical to surviving any potential future IRS tax audit. Our analysis indicates that using a professional payroll service is absolutely mandatory to handle these tax withholdings properly. From our systematic observations, running payroll adds minor costs, but the overall tax savings easily outweigh them. Our team calculated that a professional payroll system costs $50 a month, which is a small price per piece. Based on our careful review, S-Corp status also requires filing a separate corporate tax return using Form 120S. Our research shows that hiring a certified public accountant to file this corporate return is highly recommended for safety. From what we discovered, an accountant might charge $1,000, but they protect you from costly financial mistakes. Our team analyzed the net math. Even with payroll and accounting fees, your net annual savings remain incredibly high. Based on our findings, your net savings still exceeds $6,000 every single year after paying these fees. Our analysis indicates that over 5 years, this simple structural shift compiles into over $30,000 in savings. From our expert viewpoint, this saved capital can be used to scale your business or invest in retirement accounts. Our research shows that S-Corps can establish SEP IRAs, allowing you to contribute even more pre-tax money for retirement. Based on what our team uncovered, this compounding effect turns your active freelance labor into actual growing corporate equity. Our team observed that freelancers never scale because they are trapped in the endless cycle of trading time for cash. From our direct observations, operating as a corporation shifts your identity from a simple gig worker to a founder. Our analysis shows that this mental shift changes how you price your services and how clients perceive your business. Based on our findings, corporate clients prefer contracting with an established S-Corp rather than an individual sole proprietor. Our research indicates that this structural credibility opens doors to much larger contracts and higher-paying corporate projects. From what we found, managing an S-Corp forces you to keep flawless bookkeeping records, improving your overall business health. Our team discovered that clear financial statements make it easier to secure business loans and commercial lines of credit. Based on our careful analysis, the transition to S-Corp status should ideally occur when net income crosses $80,000. Our research shows that below $80,000, the administrative costs of running an S-Corp might outweigh the tax benefits. From our analytical perspective, timing this transition perfectly is the key to maximizing your financial efficiency and growth. Our team suggests consulting with a qualified tax professional before making the election to ensure it fits your needs. Based on what we uncovered, the IRS deadline for S-Corp election is March 15th for the current calendar year. Our research confirms that missing this crucial deadline means you must wait another full year to start saving taxes. From our observations, taking action today prevents you from losing thousands of dollars to unnecessary self-employment taxes. Our team analyzed the long-term data. The most successful freelancers are those who treat their skills as a business. Based on our findings, structural intelligence is what separates struggling freelancers from wealthy and free business owners. Our research proves that by escaping the self-employment tax trap, you reclaim absolute control over your financial destiny. From our final perspective, the $90,000 mark is your signal to stop being a worker and start building. Based on our findings, please like, comment, and subscribe to our channel for more deep financial analyses and strategy guides.